Pi from Us knows that seeking high-return investment opportunities is the goal of many people. Bitcoin and Ethereum have created dollar millionaires, and thousands of other altcoins also promise explosive growth. Recently, one project that has been gaining global attention is Pi Network. You may have heard about Pi Network through friends, social media, or perhaps you're already one of the 70+ million pioneers, mining Picoin for free on your phone every day. And now, as Pi has just entered its open mainnet phase, a big question arises. Should I invest real money in Picoin? Could this be the next X10, X100 investment opportunity? It's your money, earned through your hard work and sweat. The decision to invest is entirely yours. In today's video, we'll break down Pi Network. Before you decide to put in your money, even just a small amount, let's go over 5 core things about this project. Remember, in the world of finance, patience and understanding are always the keys. Opportunities are never lacking. The important thing is being able to recognize which are truly worth it and which come with hidden risks. 5 things to know before investing in Picoin. First point, a unique issuance and price control mechanism. No ICO, no traditional market maker. This is an extremely important difference between Pi Network and most other crypto projects you've heard of. Think back to the flashy launch of many altcoins. What do they usually do? 1. ICO, IDO, IEO, Initial Coin DEX Exchange Offering. These projects pre-sell a large number of tokens to early investors to raise development funds. This creates selling pressure as soon as the token is listed. The price might spike initially due to marketing hype, but often crashes hard when early investors cash out. For example, it's not uncommon for some projects to pump 200 to 300% on day one, then fall 80 to 90% in the following weeks. Market makers. Almost every project has a team of market makers, entities with large financial resources and huge token holdings. Their job is to provide liquidity, but also to manipulate prices. They create price spikes, pumps, to attract new investors, FOMO, fear of missing out, then sell at the top, dump to make profits, or fund project operations. We've seen pumps and dumps as high as 500%, 1000%, or more in short periods across many altcoins. That's the playground of market makers and whales. But what about Pi Network? They have declared no ICO. All initial Pi coins were distributed through free mobile mining. This means there's no selling pressure from early ICO investors. More importantly, Pi Network seemingly does not have a centralized market maker team in the traditional sense. Instead of relying on MMs to manipulate price through capital, Pi Network controls price through supply management, specifically the circulating supply of Picoin. The lockup mechanism when transitioning to mainnet is a prime example. Users are encouraged to lock their Pi for long periods, up to 3 years, in exchange for higher mining rates. This reduces the amount of Pi available for sale in the market. So what does this mean for investors like you? Don't expect extreme short-term price swings. If you're buying Picoin with the hope of an X10 or X20 in a few weeks or months like meme coins or new altcoins, you may be disappointed. Pi Network's supply control mechanism is designed to aim for stability, not dramatic price shocks. Set realistic profit expectations. Investing in Pi might require a long-term vision and more modest profit goals, at least in the early stages. Instead of dreaming of X100 or X1000, a sustainable growth of 30 to 50%, or doubling or tripling your investment over a few years, might be a more reasonable expectation, if the project develops in the right direction. Second point, vision and core objective, becoming a digital currency for everyday use. This is where Pi Network differs in philosophy and long-term goals. Let's look at the current crypto landscape. Bitcoin DC, often seen as digital gold, a store of value and hedge against inflation. However, its price volatility makes it unsuitable for everyday transactions. Ethereum, ETH, a platform for smart contracts and dApps with ETH used as gas fees. Also highly volatile. Altcoins, meme coins. Most are highly speculative, with values heavily influenced by hype, trends, and pump and dump cycles orchestrated by market makers. Pi Network, on the other hand, aims to become a universal payment method. Pi Network wants Picoin to be used for purchasing goods and services within its ecosystem and eventually worldwide. To achieve this, what's the key factor? Price stability. No store wants to accept a currency that can lose 300% of its value overnight. Likewise, consumers won't want to spend a coin that's rapidly increasing in value. They'll just hold on to it. That's why the Pi core team is likely to do everything they can to keep Picoin's value within an acceptable and relatively stable range. They're not trying to create extreme FOMO events to inflate the price just to attract speculators. There won't be a Picoin season like the typical altcoin seasons we've seen in the past. Look at the prices of other cryptocurrencies on CoinMarketCap. They regularly go through wild pump and dump cycles. Picoin, based on the project's stated goals, will also fluctuate, but within a much narrower range. If this stability is achieved, it will likely be due to Supply control mechanisms, as previously mentioned in point 1. Decentralized community. Millions of users hold Pi, preventing centralization in the hands of a few whales. Growth of the ecosystem. This is the most decisive factor. The value of Pi coin won't depend too much on centralized exchanges, X's, or marketing stunts, but rather on the strength and development of the Pi network ecosystem. The more real-world applications, dApps, the more users and businesses that accept Pi coin as a means of payment, the more Pi coin's intrinsic value will grow sustainably. Imagine an ecosystem where you can use Pi to book hotels, buy movie tickets, pay utility bills, or shop on Pi-dedicated e-commerce platforms. In this scenario, Pi coin is no longer just a speculative asset. It becomes a practical currency. This is the project's long-term vision. As an investor, you need to understand, you're investing in a currency-building project, not just a digital asset to flip for short-term gains. Third point, pressure from massive supply and continuous token unlocking. This is a risk factor every investor must consider seriously. Based on information from the project or reliable sources, let's look at some key figures. Maximum supply, commonly cited as 100 billion Pi coins, a massive number compared to other projects. Bitcoin has only 21 million. Migrated supply to mainnet, currently about 10.6 billion Pi, which is 10% of the assumed max supply. Actual circulating supply, tradable, only about 350 million Pi. This is a very small percentage of the 10.6 billion migrated, and even smaller compared to the 100 billion max supply. So why is Pi coin still holding a price of around 65 cents? Very limited supply on exchanges. Only 350 million Pi are being traded, meaning the circulating market cap is just about $227.5 million, 350 M and 65, a tiny number for a project with 70 million users. Diamond hands, pioneers, most miners are holding on tightly to their Pi. They either believe in the long-term vision or simply aren't ready or willing to sell. Lockup mechanism. As mentioned, many pioneers have locked their Pi for 1 to 3 years to boost their mining rates. These coins are temporarily untradeable. If, say, 50% of the 10.6 billion migrated Pi is locked, that leaves 5.3 billion Pi potentially tradable, but only 350 million are actually on the market right now. But what could happen in the future? Token unlocking. When lockup periods end, 1 to 3 years, a large number of Pi coins will be unlocked and could hit the market. For example, if just 10% of 5 billion locked Pi is sold, that's 500 million Pi, more than the current tradable supply. The selling pressure would be huge. Price increases trigger sell-offs. 65 Pi might not tempt many to sell. But if Pi hits $1, $2, or $5, a sizable portion of pioneers might want to cash in on their free mining efforts. These sell-offs could form massive resistance levels, slowing price growth. Even a small portion of the 10.6 billion, not to mention future migrated coins, hitting the market would create major downward pressure. Ongoing migrations. As more users complete KYC, the amount of Pi moved from the app to mainnet will continue increasing, expanding the potential circulating supply even more. So if you're buying Pi coin with hopes of getting rich quick, X10 or X100, you must be aware of this enormous supply pressure. It could mean waiting a very long time, years, before seeing your desired profits, if the project successfully creates enough demand to absorb all that supply. This is a long-term game. Fourth point, community strength and the psychological price floor. This is a fascinating aspect and a unique strength of Pi network. Normally, people who receive free tokens through airdrops or mining tend to sell quickly to cash out. However, the Pi network community displays a very different behavior. Not just selling, but buying. Surprisingly, it's the very pioneers, those who mine Pi for free, who become strong buyers when the price of Pi drops to a certain level. Whenever Pi drops below 16s, there's typically strong buying pressure from the community. They see it as a cheap price and accumulate more. Creating a psychological price floor. This collective buying behavior creates a strong support zone, a psychological price floor, that the market finds difficult to break below. The $50, $60 range is considered the current price floor. Why? Because once prices approach that range, millions of users are triggered to buy. Power of the masses. Let's do some simple math. Pi network has over 70 million registered users. Suppose only 1 million loyal users, just 1.4% of the total, decide to buy $100 worth of Pi when prices fall. That's $100 million in buying pressure. If 10 million users, about 14%, buy $100 worth, that's $1 billion. This kind of collective power is enough to face off with any whale or fund trying to dump the price. Fear of the whales. Market makers or whales must tread carefully here. If they attempt to crash Pi's price too aggressively, they risk having their Pi snapped up by the community at cheap prices. This is a kind of community-driven short squeeze, reminiscent of the GameStop saga in 2021. Hodling and self-custody. Another interesting trait is that many pioneers tend to transfer their Pi coins to personal wallets on the Pi browser after buying or mining, rather than leaving them on exchanges. This lowers the amount of Pi available for trading, increases scarcity, and reduces the chances of price manipulation by centralized exchanges. This community strength is an intangible but highly valuable asset for Pi Network. They are united, they believe in the project, and most importantly, many are not just passive miners. They're willing to spend real money to accumulate more Pi when the price is right. This is a price support factor that investors should not overlook. It adds a layer of relative security compared to other projects that lack strong communities. Fifth point, real utility. You can spend Pi, not just watch it. This is perhaps the most impactful and unique point that sets Pi Network apart from thousands of purely speculative tokens on the market. If you buy Bitcoin, Ethereum, or other altcoins, it's mostly for hodling or trading, to wait for the price to go up and sell for a profit. Rarely does anyone use Bitcoin to buy a coffee every day due to high fees and price volatility. But Pi Network's ultimate goal is real-life integration, dApp ecosystem. Inside the Pi browser, an ecosystem of applications is slowly forming. There are e-commerce platforms like PiChain Mall and Pi Barter Mall, where users can list products and accept payment in PiCoin. There are also games, services, and utility apps where Pi serves as a medium of value exchange. Pay with Pi movement. In several countries, especially across Asia and Africa, there's a growing grassroots movement to accept PiCoin for payment at physical stores, restaurants, small shops, service providers, etc. Although still small-scale and experimental, it shows real potential for Pi to become a functional currency. Minimizing total loss risk. This adds a protective layer for investors. Even if PiCoin doesn't rise on exchanges as expected or even drops, you still hold a coin that has practical utility in its ecosystem. You can use it to purchase essential goods and services or trade it with others in the community. So even if you bought Pi at a higher price, you're not completely at a loss like you might be with a scam token that has no product or ecosystem. At the very least, you can still spend your Pi. Imagine you buy 1,000 Pi at 70, spending a total of $700. After some time, the price on exchanges drops to 50 cents. If this were a useless token, you've lost $200. But with Pi, you might still be able to buy a smartphone worth 1,000 Pi on PiChain Mall or exchange it for other services in the ecosystem. This real-world utility reduces the psychological burden of price volatility. The ability to use PiCoin in real life is a crucial factor that builds intrinsic value for the currency. It allows Pi Network to break out of the mold of a purely speculative asset. If the ecosystem continues to grow, demand for Pi will rise, and with it, its sustainable value. So what's the investment advice? After analyzing the 5 core points above, it's clear that Pi Network is a very unique project, carrying both great potential and significant risks. Potential? It aims to build a global digital currency with tens of millions of users and a real-world utility ecosystem. If successful, its value could grow sustainably over the long term. A strong community is a major advantage. Risks: a massive token supply and potential sell pressure from future unlocks. Its success depends on the ecosystem's development. Legal clarity is still lacking in many countries. A focus on price stability might not appeal to short-term profit seekers. Therefore, my investment advice as a financial expert is: 1. Absolutely do not all in. Never invest all your assets, savings, or borrowed money into PiCoin, or any crypto asset for that matter. The crypto market is inherently risky, and Pi Network, despite its potential, is no exception. Number 2. Only use idle money. Invest only what you can afford to lose, money that won't affect your daily life or your family's well-being if things go south. This is money you're willing to gamble on an opportunity, fully aware of the risk. This might be 1%, 5%, or at most 10% of your high-risk portfolio, depending on your risk appetite. Number 3. Use dollar cost averaging, DCA. Instead of investing a lump sum all at once, consider dividing your investment into smaller amounts and buying periodically, e.g. monthly or quarterly, regardless of the current price of Pi. This helps average out your purchase price, reduces the risk of buying at a peak, and removes the pressure of timing the market, something even pros struggle with. Example: if you plan to invest $1,200 in Pi, buy $100 worth each month for 12 months. 4. Define your goal and vision clearly. Why are you buying Pi? For short-term trading or long-term belief in a digital currency revolution? If short-term, Pi wasn't designed for quick flips. If long-term, 3 to 5 years or more, be patient and closely follow ecosystem developments. 5. Take full responsibility. Every investment decision is yours. Make sure to do your own research. Read the project's white paper, engage with the community to gain diverse perspectives, and never invest just because someone else told you to. Pi Network is a massive social and economic experiment, an ambitious one. It could be a spectacular success and become part of the future of finance. But it could also fail, or take a very long time to prove its value. Invest with a cool head and a solid risk management strategy. Final words. I hope this detailed analysis has given you valuable and in-depth insights into Pi Network. Every investment carries risk, but understanding your investment is the best way to manage that risk. What do you think about Pi Network's potential and its risks? Are you mining Pi? Do you plan to invest in Pi Coin? Drop a comment below this video. Let's discuss. And don't forget to like this video if you found it helpful, share it with friends or family interested in Pi Network, and most importantly, subscribe to the pifromus channel and hit the notification bell so you don't miss future deep dive investment analyses. Thanks so much for watching, wishing you clarity, smart investing, and plenty of luck in the financial markets. See you in the next video.